Today, we're going to be talking about how you can hedge your long-term shares in Tesla if you think that the stock is going to be going down in the short term. Now, the platform that we're going to be using in this example is going to be Robinhood. This is not my main broker, but I do love the interface when it comes to options. And if you're somebody who has never gotten into selling covered calls or selling cash secured puts, this might take some time to get used to, but it is by far one of the strongest and most consistent ways to profit in the market. For those of you who do not know who I am, my name is Peter DiCarlo. I've been a full-time trader and investor for the past 9 years. And my goal with these videos is to give you very realistic expectations and very realistic step-by-step strategies that you can use to be consistent and profitable in the market. And like I said, the reason I do it is because this type of content would have helped me drastically in my first couple of years of trading, and most certainly would have saved me a ton of money. Now, if we look at price action for Tesla over the past couple of weeks, you're going to see that we've basically been squeezing between $190 and about $170. And so normally, if we were going to buy a call option, we would be bullish on the stock. And that means that we want the stock to go up. Now, if we're bearish on the stock, we could do what's called a put option. And that's when we buy a contract saying that we think Tesla will drop to a specific price by a specific time. And now trading directional options like that is a way to make money. But the problem with it is that not only do you have to pick the direction of the stock consistently, which is already not easy to do, you on top of that have to pick the timing. So with an option, because there's theta decay, you have to choose the timing to perfection so the theta decay does not ruin your trade. And if you're interested in learning the ins and outs of options, we do have a completely free beginner's options trading guide down below in the description. But now let's look at this and say to ourselves, we're long-term shareholders. For me, I have 400 shares long-term. I've been holding it for a very, very long time now. And so, as a long-term investor, you have to learn how to ride the ups and downs. But let's say that you want to make some money in the short term because you think Tesla's going to go down, but you don't want to sell your shares either because you don't want to pay taxes on those realized gains. Because if you sell a stock for a profit within 1 year, you're going to pay short-term capital gains, which for some people like myself could be up to 40%, as opposed to long-term capital gains, which is about 15%. So the way to get around that is instead of closing the trade, you open up a different trade, and in this case, a covered call. Now, when we're setting this covered call up, we are going to pick a price that we think Tesla will not close above by a specific date. So if we see Tesla right now, let's think that, we're trading at 175 and there's no way that we're going to see price close next week above $186. Now, I am bullish on Tesla, so I'm not taking this trade, but we're just going to use this as an example. So we're going to mark it with a red line here on our chart. And from here, we're going to go over to our options chain. We're going to click on sell and we're going to click on call. So normally when we are buying a call, we are bullish. And this means that the person who is selling the call to the bull is therefore bearish. If we go into our expirations, we can click on June 14th, which expires in 9 days, and we can scroll right up to the $185 strike price, which is the closest one that we have. $186 is not going to be a strike, so we can either go with 185 or up to 190. So we're either going to have to go with 185 or 187.50. And you're going to see here that the cool thing about Robinhood's user interface is it's automatically going to show you your chance of profit just off of statistics. So this is not counting your win rate or your strategy. This is just based off of numbers. You have about an 83% chance for this to expire worthless, which is what we want. So there's an 83% chance that we are going to make money. And that inversely means that there's about a 17% chance that the person who's buying the contract from us is going to make money. If we click on this window and scroll down, we're going to be able to see all of the important aspects of these contracts that we want to look for. The first thing is going to be the bid and the ask. This is what people are willing to pay for it and what people are selling it for. But more importantly, we want to make sure that we have very good volume. So 12,610 volume is very, very good. And the lowest I would go with is about 100 volume, because it doesn't matter how much money you're going to make unrealized, you have to sell that first. And so if you're going to sell it, you need to have buyers there and you need to have volume. So if I were to come over here and click on the plus button, this is going to load up that position for us. And you're going to see that if price closes below by even a penny, below $185 by next week, we will make the full $220 profit. And if price breaks and closes above $185 by even a penny, we are going to get to keep the $220, but we're going to be forced to sell our shares of Tesla at $186, which isn't the worst, but for most people, they're not going to want to give up their shares. But the cool thing about this is your downside is pretty low. I mean, even if you're selling cash secured puts, the good thing about this is that unlike a spread, we're not going to lose everything. In a worst case scenario like this, you will have to sell your shares long term, which will suck. And if it's a profit, like we said before, and those shares get taken away from you, then you will have to pay short-term capital gains, which will suck. So when you're selling covered calls, I really, really recommend that you pick a strike that you think has no choice at all, no way in hell that it's going to be hit. And now as a bonus, I want to talk to you guys about cash secured puts. I wasn't planning on doing this, but since you guys already have that base knowledge and base understanding of what a covered call is, I think that this is an opportune time to talk about one of my favorite bullish ways to get paid for just buying your favorite stocks long term. So we said before that in a covered call, we're picking a price we think that, stock will not close above. Well, what if we were doing a cash secured put? We would sell a put. Remember, we said that when you're buying a put, just like buying a call is bullish, buying a put is bearish. So if we are selling it to this person, we are the opposite of the buyer. So when we're selling a put to someone, they are bearish and I am bullish. Once again, we're going to move over to our chart and we're going to pick a price that we think Tesla will not close below by next Friday. And in this case, let's just use something simple like $168 to $170. We will come back over to our options chain. We will hit sell put and we will pick the price of $165.50. You're going to see that with this one, we will end up making about $256, but this time we will make all of that money if Tesla closes above $167.50. And so you can see that by selling covered calls and cash secured puts, you're going to make money if the stock goes up, if it goes sideways, or even in this case, if it drops, but it closes above 167. So like we said in the beginning of this video, we're not focusing on picking the direction. We're not focusing on picking the timing. If anything, we're just focusing on what we think the stock will not drop below. And here's the kicker. This is the best part about cash secured puts. With a covered call, if you get stuck, you are forced to sell your shares, which sucks, but it's not the end of the world. But this is the kicker. With cash secured puts, even if price craters on Tesla all the way down to, let's just say, $164 in the next week or so, I still keep the $256 profit, which is amazing. But then I'm forced, it's not an option, I am forced to buy 100 shares of Tesla at $165. So essentially, I'm going to get paid $250 to buy Tesla at $167.50. That's like putting a limit order in and getting paid in the meantime. Now, for somebody with a smaller account, this is not going to work. You really need to focus on building your account up through smart investing, smart trading, being extremely patient, learning skills outside of the market so that you can make as much money as you can and live off of as little as you humanly possibly can and work on building your account through that spread. So this is definitely one of those things that if you have $100,000 plus, even $50,000 plus, and your focus is just safely growing your wealth, this is the move for you. Now, we do teach it in our private academy, but if you are somebody with a smaller portfolio and a smaller account, then you should definitely check out our private academy. Over there, you get access to all of my real-time trades and alerts, which you guys can see here. And of course, not every single month is green. We can go back and look at January. Following the same exact strategy that I follow all of the time, we actually lost $34,000 in that month. But then in February, we came back with a vengeance. March as well came back with a vengeance. April, we're even back more with a higher vengeance. And so what I try to push and purport to you guys is the fact that losing is okay. You have to learn to lose. You have to learn to lose in stride. That's what being an entrepreneur and being a trader is. You have to learn that. So if you guys want to become part of the community, go ahead and check it out. The link is in the description. I'll see you guys next time. Peace.